Is Wall Street setting the trap for us as retail traders? This chart may not look like anything when you first check it out, but what if I was to tell you that now we are seeing more retail traders than ever before pumping in? Yes, we have surpassed the meme market mania, and the latest results from JP Morgan will absolutely blow your mind. In today's video, we take a look at the sentiment results, Amazon's earnings, and of course, what's going on with some of the hottest stocks in the world as some enter back into positive gamma. Join us, guys, as we recap exactly what's happening in the markets right now. Well, welcome back, everybody, to the Daily Show, where we simplify the complicated when it comes to market, sharing the latest data, Wall Street moves, and of course, the big options flows. In today's video, we need to talk about positive gamma. We need to talk about some data moves, but more importantly than any of this, we need to talk about the elephant in the room. According to the latest JP Morgan data, guys, we are seeing huge moves when it comes to retail sentiment. Yes, it looks like across the board, nobody's ever been more bullish. And this is now surpassing periods of time from 2021. Now, on the surface, you might say, well, that doesn't sound that bad. But remember, this was a period where we had companies being traded at 1,000 times earnings. We had memes like GameStop, AMC, Nokia, BlackBerry, and many other things going absolutely wild. And of course, it all ended very badly at the end of 21 into 22, where we saw a big sell-off across the board, almost entering into a bear market territory. So why is this all important? Well, retail flows continue to stack into one segment of the market. And if you guessed it as the NASDAQ and tech stocks, then you would be absolutely correct. According to the latest Goldman Sachs data, it looks like retail flows continue to spike heavily into the NASDAQ, and the last 2 weeks are now the biggest flows in 2 years. So sometimes they say right at the top, tons of transactions go on. Well, as it turns out, we have now seen record on record. The record of 448 billion year-to-date annualized inflows into US stocks has been occurring. And of course, this now surpasses the 2021 overall inflows. And this makes you wonder, when is it all going to end? We've been, of course, very bullish on the channel, but we are aware that this is a concern. And I'll explain to you guys why it's a concern. It's because the narrative is being run by the news and the media and the headlines. And in no way can you can see that completely when you check this chart. Take a look at some of these reads. On the 15th of January, we only saw 25% bullish people in the market. Now, this is generally a resi kind of like a retail read in many ways, but only 25% of people were bullish. The next week, 43% of people were bullish. That is one of the greatest switches we've ever seen in history. This week, off the tariff news, remember these are taken as of Tuesday close, we saw it down to 33. And I would guess on the day of Monday, we might have been down in the 26s to certainly underneath 30 if you'd taken the read of that point. So what this is telling you is that you need to focus on one of the mantras we talk about here on the channel, and that is if it's in the press, it's in the price, and you need to be patient, react, don't predict. In this case, you need to think about like 3D chess. Yeah, you need to think about what is the market doing, what is the narrative, and more importantly, where are the flows going? And this will become pretty paramount when it comes to checking this market out this year. Now, speaking of this market this year, we do want to, of course, always look at the seasonality data. Take this with a grain of salt, though. Price action will ultimately be key. Of course, many people are looking at the first start of February being pretty positive, which so far it has been, then potentially weakening through the middle of the month, and then potentially bottoming in March and picking back up. Remember, we do expect a big 10% sell-off at some point this year, just due to all of this retail flow. Basically, at some point, there's going to be an absolute collapse, and the reason is going to be just wiping out retail traders. If we have this many people in here, then eventually something bad's going to happen. It's also a note of generally a market that starts to get into the later cycles of a bull run, which of course we've talked about possibly being in this year. Now, if we look at some of the data here from JP Morgan's Mislav, according to Seth Golden over on X, you can see here that commodities are not working with US dollar strength. Well, of course, that makes perfect sense. But I thought the interesting thing here is they're keeping a short on semis and they're preferring software. Now, remember, just because you're getting this report doesn't mean they haven't already been doing that for a long time. They're about to switch it up. And we'll talk about Nvidia later on today's show because it's actually entering into positive gamma. But I thought it was interesting to see here that they're reiterating a concept which is lower US dollar could also be good for Chinese stocks, which is something we've argued for a little while here on the channel. Let's talk about the good, though, for the economy. As we've mentioned, we just don't have enough warning signs yet, other than the sentiment that we need to potentially be out of this market on the bull end. US rail traffic looks pretty good to me. And of course, you can say this is front-loading tariffs or anything else, but in general, it's pretty good. The equal weight consumer is also looking really good, which, as you guys know, we love the American consumer read here on the channel. We've used it very effectively over the last couple of years to really show us that sentiment is quite good underneath the hood, and earnings continues to do well. Yes, Amazon kind of missed in some ways, but really it's done quite fine. We have a look at earnings growth. The expectation of the rest of the year is rotation. So even if retail traders are all in tech, the actual market is going to move towards mids and smalls. And the reason they're going to do that is purely just where they think earnings is going to be. EPS is expected to be massive in terms of growth on especially small caps by the end of the year. And that's why we've already started to see that rotation. Remember, we've talked about this in some of our previous videos. If it's your first time here, make sure to subscribe firstly, but also check some of those out so you can get that information. As we guys know, we have non-farm payrolls this Friday. That's the jobs number. That will be important for us all to check out. And of course, we'll need to see whether the jobs number is going to be good or not. Check out our X account for the latest information there. I think Goldman Sachs think it's going to be 178. But in general, remember with non-farm payrolls, it's usually the reaction after an hour of trade that is more likely to be the correct one. The initial reaction can definitely be a trap. Bitcoin, is it going to do okay during February compared to what the market could do? Well, as we already mentioned in the previous video, 82% of the time Bitcoin does tend to go up since 2014 over this month. And technically, it's the second strongest month of the year. So that's an interesting period. We also know that inflows have been positive in the last couple of days, even though price action has been kind of sideways to even down for both coins. So that is people buying the dip. So inflows are there. And of course, one other thing that we've been reiterating here recently is in all of this turmoil that's going on, gold and silver generally do perform pretty well. And so far, that has been true. Now let's jump into the charts. Let's have a look at S&P 500 to start off with. And the last 24 hours was more of the same as we approach the most important current level, which is that 6,100. Now, the thing about retail sentiment being so high is you might say, well, why is this important? Well, it's important because retail sentiment is expanding at an extreme rate, yet this is the price action. It's basically a pit. So what that's telling you is it could be that Wall Street are selling their positions into retail. Remember, I've already detailed, and we've looked at this together, that there are many dark pool transactions all over this particular area. And it certainly has me wondering whether we could be in a distribution pattern and just not know it yet. Of course, at the moment, we have to be bullish still, but let's continue to watch how this market goes as it makes new highs if it can continue to do so. And of course, with the close over the last 24 hours, with the resistance call wall, that is very possible. 6,100 will be the most important level of the next 24 hours, and you can see why when you take a look at this chart. 6,100 is the call wall. So effectively, if we break 6,100, whether it's next week or of course non-farm payrolls, the next level for the market will generally be 62. And this is what we call a positive gamma effect. If we break a call wall, it starts to feed upon itself. We've all seen this before many, many times, and it tends to go and gravitate towards the next level. Remember, 6,100 has been too much for the market several times over now. So if we do get through it, that's going to be a big deal. What about Tesla? Well, Tesla's lucky in some ways that there are a whole bunch of people trying to put puts at around 370. The last 24 hours, it got down pretty low and it managed to recover back from there. But it does still suffer from the fact of what we've been talking about recently, which is the possibility of a 330, 340 kind of level. And this will be, of course, something that we're watching over the next, I would say, couple of sessions, especially post non-farms, to see whether Tesla's sentiment continues to be driven down by news narratives and other things. On the plus side of something else, though, it's Nvidia. It broke through 125 and it gravitated straight to, that's right, the 130 area. Now, why is this important? Well, you can see whether it's the 7th of February, whether it's the 14th of February, or even the 21st, 130 continues to present itself. This is a huge call wall. We break through, Nvidia could be back. And of course, this is getting people kind of excited. We are, though, very importantly, at the resistance. So if you're a bear, you really don't want the markets to push through this level because as you can see, all of it goes positive gamma very quickly. And as we know, semiconductors move like lightning when they do move. Speaking of lightning, if you haven't already checked out the sponsor of today's video, which is Tiger Brokers, then why don't you consider doing so down below? Why would you do such a thing though? Well, what if you won an award? What about 3 awards? Yes, it turns out Tiger Brokers, as they've been sponsoring the channel, continue to win some of Australia's biggest awards when it comes to being one of the best brokers around. And of course, they do offer a special offer for you guys in the comments description down below, just for being a viewer of this channel. On top of all of that, of course, we do see competitive fees into the best market in the world, which is of course US, and they're continuously driving these down to make even better opportunities for you guys out there. You'll notice FX fees are also incredibly good with their latest offer. And of course, the most important thing of all, which is 24/5 trading hours. That's right. If you're not in the US, it's hard sometimes to trade it within the trading hours, especially here from Australia. Markets open at sometimes like 1:30 a.m. in the morning, for example, here on the East Coast. Well, that can make it pretty difficult. But what if you could trade before and after? Well, with Tiger Brokers, you can do that. And of course, if you're interested, check out the links in the comment down below. And thank you to Tiger for sponsoring today's video. Now let's jump on over to the big charts here. And of course, we need to talk about this one, which has been, of course, the option spread and bonds. Are we seeing continuous freak out by that market? Well, luckily it downticked a little bit. So of course, we're going to give that a plus for now and say, okay, all good, all calm until the non-farm payrolls. Treasuries has bounced through, giving us, of course, the inverse head and shoulders type of pattern. We had some large transactions through there. You can see actually the volume spikes, and so far so good. And this opens up, of course, $94 for treasuries. But what is really going to be the catalyst here is the yields. So let's actually have a look at the yields. Home builders looks fine, by the way, but US yields here, 30-year, 20-year, 10-year, all of them are on trend lines. And these trend lines, if broken and break these demands, really opens up quite significant moves in yields. And of course, if they go down, guess what? We're going to see treasuries rise back up. So this is going to be a very important read for the market, but also I would say more so for treasuries than anything else. Take a look at the US dollar. That could also start flailing around if we do end up getting a read that pushes it down. And you may say, well, what's the read? Do we need a good number or a bad number? Hey, it really depends on a lot of things, mostly the revisions. Remember, with jobs numbers, the problem is they're kind of like fake, really. They give you a number, then a month later they revise it, then they revise the previous number to that. So yeah, I take it with a grain of salt. Instead, we look at the price action, and it's where, in many ways, we coined the phrase patience, react, don't predict. You can see the flows currently going towards treasuries. Question then will be, do we continue to see that, and what do these numbers actually show? And of course, breaks of the dollar down will be significant, which we'll talk about after the event. Gold continues to do really well as it approaches closer and closer to our 3,000 target. Very nice stuff, guys. A lot of people caught off guard, of course, with gold recently, but not you. Of course, we've been talking about this together. Silver looking pretty good still, putting a bit of pressure on, of course, this upside for first resistance. We're liking silver still. Like the last 24 hours, obviously a bounce here. And ultimately, it's sitting just before a resistance. Why? Because non-farm payrolls is coming, and that's going to be a catalyst, either bullish or bearish. Of course, we'd have to go with the bull side for now because that's what price action's telling us. US oil continues to make a series of lower highs and lower lows, so it's still negative at this stage, and nothing really is changing that. It's not at a major support or anything on the big time frame charts. Tesla did recover, did okay considering it got back up here, but still could be a trap. I think if you're a bull on Tesla, you'd probably want to see it break 393 plus and then start to go bullish on it again. For now, I'd say the bears are still in control of this. And if they can push it below 370, as you saw, the put wall was there, it could create a gamma effect down to 330, 340, which is something we've argued for a while. We still think Tesla's a bit overpriced here on the markets. Nvidia looking good, putting pressure on 128 resistance, 130 the core wall, obviously pushing up big trades as we know here. A lot of big trades going in on this stock, and it could be against something like the read we saw before, which is like, oh guys, we're underweight semis. Yeah, you were underweight semis a few months ago, but do you really think they're underweight semis at the most traded zone? I bet you they're having a look at it and they're going, this looks pretty tasty all of a sudden. AMD still struggling down in these areas. We'll obviously update when that changes. And of course, HSI, wow, even better than we expected. So another good day for HSI as it pushes these resistances and looks like it's ready to potentially go to a new high. This is looking good. And again, guys, it is against the sentiment and the reports that you mostly read elsewhere. And of course, this is why you follow the price action, kind of do a little bit of counter logic to what a lot of people tell you, and you'll find that you get some banger levels. US 2K putting pressure on the high, but too much for it ahead of non-farms. This will be a great chart to watch. We look forward to doing a review on this post non-farm payrolls. And NASDAQ, as we mentioned before, tons of retail buying it. Very tough price action. Ultimately, of course, though, we do remain bullish for now, as we wouldn't go against the overall trend and the positive gamma flows. Ethereum, Solana, doesn't matter which XRP, doesn't matter which coin you look at. Most of them need to take out the highs that were performed after that really crazy Monday trade. And of course, if we manage to get back above like 2950, for example, on Ethereum, that's going to be a relatively bullish catalyst. When it comes to Bitcoin, still stuck within the overall could be distribution, could be accumulation range. At the moment, we're going with accumulation, mostly because the market itself has found wicks down here in the lows. But do remember, like even this little thing here, a 99K plus market now on Bitcoin, that's looking strong if it gets a close. So again, non-farm payrolls, a lot of catalysts here for us to react off. It's going to be a great weekend video when we're ready to do that. Speaking of the news that's coming up, as you guys know, it is non-farm payrolls. The Bank of England did cut rates overnight. So of course that was the story. 169,000 jobs are expected. Most of the time, we don't look at that number. Instead, we look at the revisions. And of course, we'll have a full recap of that after the event here on the channel. So make sure to subscribe for that. As always, guys, if you enjoyed today's video, then remember to subscribe. Come over and check us out in Perth and Brisbane if you live in those particular states here in Australia. We've got free events occurring in February. There's a few spots left, so make sure to sign up for those. It's going to be absolutely awesome to meet you all, and we're sharing some information we just do not share anywhere else. So it's special if you do come out. And as always, if you enjoyed today's video, then why not check out the sponsor of today's video as well, which is, of course, Tiger Brokers. Thank you so much, guys. Bye for now.